What's going on, everyone? Sal here, MillionaireTradingAcademy.com. Let's take a look at Apple here, and I got really lucky today. I made some really good money. I posted that on Twitter yesterday, that 320 was the wall in Apple. 320 was the wall in Apple, at least for today. I don't believe that it could be over. I just believe that today we had a very tired short-term trading opportunity to take advantage of the weakness in Apple, at least on the buyer side for short-term buyers. But I want to show you something, again, using my John Hayden's RSI zone strategy to show you that, whatever weakness that short-term buyers exhibit, long-term buyers who are seeing Apple as a 3-month, 6-month, 1 year, 5-year horizon, they're seeing this as a buying every dip they're seeing as a buying opportunity. And I want to show you that in the stock right now. So when we look on, a short term, the hourly or the 30 minutes, we see where it clearly go to 30 minutes, where it clearly broke, that 60 RSI level where we start to see some real selling pressure get exhibited. But of course, you do have some buying here that happened back on the 10th, and of course, you see the dip buyers come in at support, right, which is 40 RSI for bullish momentum. But I want to show you something here, because we always talk about how trends begin at short-term time frames, but then either end or are agreed to at the longer time frames. And I want to show you something here, because when we look at the longer time frames, when we look at people who are willing to hold the stock for a little bit longer time, they are using every dip as an opportunity to buy. Every single dip, every single bit of weakness in the stock is an opportunity for them to buy more shares. And they've been right. They've been right on that for several weeks in Apple. I mean, going back again, this is the 4-hour chart. I can go, obviously the daily is going to prove that as well. But when we hit that 60 RSI where we need buying support the most, right? Where we need buying support the most, they jump in. Obviously, when we get all the way down to 40, that's an easy call on a bullish uptrend. They're going to come in there as well. So, if you're going to short Apple, this is not something you even hold overnight. I hope tomorrow is the difference maker. 1:15. Tomorrow being Wednesday, right? Wednesday is going to be the difference maker. We get 2 days of red, something we haven't gotten in a while here in Apple. I'd love to see a red week. We haven't seen a red week in Apple in a long time. And again, that's because the longer time frame traders, the 4 hours, the 2 hours, they are jumping in and buying any signs of weakness in the stock. And again, it's been winning for them. This is the weekly chart showing here, if you've been buying weekly calls, if you've been selling weekly puts, you have made a killing in Apple. But how far is too far? All right, how far is too far here? And I'm going to change my thing back to 14. I don't use 9 on the RSI. Somebody posted that on the comment. I go with the standard 14, but somebody said switch it to RSI 9. 9 days of price action. I guess for this kind of for this kind of price action in Apple, it might make sense. But I like, I always like to have more information than I need, because more information on the chart is always better than not having enough. But anyway, going back to what I was saying here, Apple is way overbought. All right, whether you use RSI 9 or 14 days of price action, it's overbought. And I'm gonna put the Bollinger Bands back on here. Hey, look, I'm not saying bet against it here. This is really the first few days where I can say that this is struggling here. All right, this is the first week that I can honestly say that it looks like it's struggling. Now, what saved it last week, right? Because we're looking at some very similar price action to last week, but at the end of last week, we had all these analysts come in. All these analysts come in and give just ridiculous, $450, $500 price targets. Now those are all on the table from some of the best analysts, on the street. They're out there now. So, what do you do now? What's the catalyst here now, right? So, you still got the buybacks. You still got Federal Reserve QE. I have no doubt the Fed is probably going out there and buying the best 100 companies on the market. But if I want to give you any advice on Apple is, if we continue to see Apple, go higher into earnings, if we are above $320 on the day of earnings, I would sell puts going into that earnings announcement, because Apple at this point has to blow the lid out the water for this call. I mean, they gotta blow it out the water. And at this point, I think the return, the risk to reward, and the returns are would be just so generous for you that losing $200, it would be worth it going into earnings with Apple being above $320, $330, $340 if we're up there. If we're up there. Now, if we're below 310, 305, 290, I say do nothing. Do nothing at all, because I think you probably gap higher. But if we're at 340 or higher going into earnings, I'd buy puts. I'd buy puts, because I think the number would have to just be so good to gap up and then keep running. It'd just have to be a number that just makes everybody's jaws drop. It's your boy Sal. No, I made this video already too long. Let me know if you like it. Let me know any other tickers you want me to talk about here on the show. But again, risk reward on Apple is all in your favor going into earnings if we're above $320 to buy some puts. Be willing to lose 200, 300 or more, because the ROI is literally 100% if you buy, some puts $5 under, $10 under, $20 under for 2 weeks, 3 weeks after earnings, because those puts are going to run. They're going to run if Apple doesn't just blow it out the water. It's your boy Sal. Until next time, MillionaireTradingAcademy.com. Take care.